Guys, last week I told you that there will be only two scenarios in the market, and these two scenarios will be defined by this particular candle. Now this is from the previous technical analysis. If you see that I told you that initially 3940 will be a very heavy resistance, and if market is able to breach 3940, in that case there is a vacuum and market will move up, and initially it will hit 4035 and then 4065. So 4065 will act as very heavy resistance because of multiple reasons. And if market fails to hold around this the 4065, in that case it will come down for sure 100%. And if for some reason market breaches this 4065 and closes or moves above these the three moving averages, in that case it will be a short term bull market. So guys, you have seen that market moved as we have anticipated, and this was the Thursday, this was May 26th. On May 26th, the closing of the market was 4057. So market really struggled on Thursday to close above this the 4065 that I told you that it is going to act as very heavy resistance. Now the only reason why the market was able to move up this much, like 2.5%, approximately 2.5% on Friday, the reason was that on Friday there was a gap up open in the market, and the open was 4077, and this was more than 4065, and with that a little push it was able to breach all of these the moving averages, and finally it formed a bullish candle. So for last many weeks and for last many months, the market is moving as per our technical analysis. Anyways, guys, let's do the technical analysis of S&P 500 index. As usual, this technical analysis will be in two parts. First, I will do it on the weekly chart, then I will do it on the daily chart. So this way we will be able to get the most accurate results as we are getting for last many weeks, last many months. So I'm going to begin with the weekly chart. Guys, this is the weekly chart. Let me write it down. This is the weekly chart. Weekly chart means one candle represents 1 week, not 1 hour or 1 day or 1 month. One candle means 1 week. So first comes the interpretation of the candle. If you see that this weekly candle, it's a very heavy bull candle, very heavy bull candle, and the high of the candle is almost equal to the closing of the candle. That clearly indicates that there are short-term bull sentiments in the market. This means on Monday, whatever happens, market is expected to move up, irrespective of the open of the market, whether there will be a gap up or a gap down open. Market is expected to move up. Now the retrace level that we will deduce when we will talk about the daily chart. So for now we are going to complete the weekly chart. Anyways, if you are bearish, in that case you need not to worry about anything because market is not going anywhere. Market is on a short-term retrace. Okay, so there is a short-term retrace only, and eventually market has to fall, and market will 100% it will fall. The reason is that market is trading below the Ichimoku cloud, and this has happened after the 2 long years, after March 2020. And until and unless market closes above the Ichimoku cloud, the chances of happening that thing, considering the current geopolitical factors, chances of happening this particular thing are less than 1%. Now let's talk about the technical indicators. First comes the Bollinger Bands. If you see, this is the lower band of the Bollinger Band, this is the median of the Bollinger Band. Market has closed between the lower band and the median of the Bollinger Band. This means the market is bearish. Then comes the moving averages, because the market has closed below the moving averages and there is a clear fan out in the moving averages. Market is still bearish through the moving averages on the weekly chart. Remember, we are talking about the weekly chart. Then comes the Ichimoku cloud, because the market for last 4 weeks market is continuously trading below the Ichimoku cloud. This means market is clearly bearish. Now if we talk about the MACD, if you see that the MACD is less than the signal, MACD is almost negative 105.92 and the signal is negative 59. Okay, so this means that there is a very heavy divergence in the market, and this candle is doing nothing but trying to decrease that particular divergence. As you know that MACD is moving average convergence divergence. So there was the divergence increasing. I told you that the divergence is increasing and it is very heavy. And we won't be surprised to see a short-term bull movement in the market. Now comes the stock RSI. So when we look into the stock RSI, the K channel last week and last week, it was absolute zero. And if we talk about the D channel, So the D channel last to last week it was 11, then last week it was 3, and in the previous week it was supposed to be 0. Means if the K and D, if both would have been 0, in that case this bull candle was not supposed to be this much. In that case the bull candle that was supposed to be formed after seeing the K and D both 0 on the weekly chart, so we can expect that a single bull candle, okay, it could have moved like, you know, up to this level, means the double of this candle. Anyways, for now the K is not now 0, the K is now 18.48 and the D is now 6. So as of now, okay, see, both K and D are less than 20 and less than 25, so they are still somewhat bearish, but the market is now trying to be bullish. Then comes the divergence. So this, the divergence is normal, divergence in the closing prices of the candles, so that divergence is normal. Now, if we talk about the volatility, volatility is increasing week by week, and this volatility is at all-time high levels. The volatility in March 2020 was around 170, but now you can clearly see that the volatility is more than 190. It is 191, and looks like that this volatility is going to increase. So if we look into the last 100 years of history of the market, then we can clearly see that the market is trading at the all-time high volatility. Market is heavily volatile, heavily volatile. Now through all of the indicators except the stock RSI, okay, there is not enough momentum, not enough bull momentum, but it is trying to be bullish. So except the stock RSI, through all of the technical indicators, market is still bearish on the weekly chart. Remember this thing. Now we are going to move on to the daily chart. So we will do the technical analysis on the daily chart, then we will compare the weekly and daily, and this way we will be able to see, okay, what is the actual movement of the market, and also we will deduce the probable movement of the market on the daily chart, like what is going to happen on Monday, Tuesday, etc. Exactly what will be the retrace levels, okay, what will happen in the market in the coming week. So let's move on to the daily chart. Okay guys, so we are here on the daily chart. This is the daily chart. Let me write it down. This is the daily chart. Daily chart means one candle represents one day, not 1 week, 1 hour, or 1 month. One candle means one day. Okay, so first comes the support and resistance levels. So guys, these are the support and resistance levels. This is 4395, 4395. So market is not going to breach this, the 4395, and I will tell you the reason why this is not going to happen. Then comes the 4291. See, this is what I'm telling you for last many months, more than 7 or 8 months. I'm telling you about the 4291. This 4291 always acts as a very heavy support and a very heavy resistance, depends on the movement of the market. But whenever market comes around 4291, then market takes a break. After hitting the 4291, market tries to regain its actual movement. The actual movement means, let's say the market is bullish and now the market is retracing, it is coming down, then it will try to hold around 4291, because if it breaches the 4291 on 2 consecutive days, in that case market will be bearish. This is why market struggles to breach 4291, and if there are 2 successive candles that are formed that are closed above 4291, in that case the market is able to successfully regain its bull movement. And if the market fails to regain its bull movement, then the market comes down, and then we see, okay, now the market is coming down this, and the same thing has happened here. You can clearly see that the market has struggled for many days, and finally it came down. When it failed to hold above 4291 on 2 consecutive days, then finally it came down. So earlier it struggled a lot to close above 4291. And guys, let me repeat that whatever these support and resistances you are seeing here on the chart, these are what I have calculated. So I have analyzed the last 100 years of data of S&P 500, and then I have calculated these, the support and resistance levels. And this is the reason why my support and resistance levels are very, very sensitive to the market. And this is why the market always respects these, the support and resistance levels. Anyways, after 4291, then we have this, the 4185, 4312. So you can note down these, the resistance levels. Okay, but the most effective resistance or support levels are these that I have written in this the yellow color. Okay. Now then comes the 4185. Okay, this is going to act as very immediate resistance for the market. Then comes the 4035. Now this 4035 is going to act as a very heavy support for the market because the market has already breached this the 4035. Then comes the 3840, and if the market comes down, okay, means it is not expected to come down in the next week, okay, or initially on Monday, Tuesday, Wednesday. But when this the market comes down, maybe next to next week, in that case it will come down and it will find some good support here at 3840. Then we have some other levels like 3710, etc. Now let's do the technical analysis on this chart. First comes the interpretation of the candle. If you look into this, the last candle that was formed on Friday, the open of the market is the low and the high of the market is almost the close. So this kind of candle, whenever this kind of candle is formed, it is a significator that there is a bull movement. Okay, means there is a short term or there may be a long term, depends on the movement of the market. But considering this situation, okay, there is a short term bull movement because there are no wicks here, okay, and this is a rectangle. This is a perfect rectangle, and this is a bullish rectangle, not just rectangle, but this is a bullish rectangle without any wicks. Now let's talk about the technical indicators. First comes the Bollinger Bands. If you see that this is the upper band of the Bollinger Band and this is the median of the Bollinger Band, because the market has closed between the upper band and the median of the Bollinger Band, so the market is bullish through the Bollinger Bands on the daily chart. Remember, we are talking about the daily chart. Then comes the most important thing, and this is what I told you, that if the market is able to move up or if the market is able to breach above this 4065 and the market is trading above all of these three moving averages, in that case market will be in a short term bull movement. Now if you see that this particular candle, the last candle, okay, this last candle has closed above all of these three moving averages. This clearly means that the market is now bullish, and because of this, the conditions that are prevailing in the market, so the market is short-term bullish. But the market is not 100% bullish through the moving averages, and the reason is the pattern of these the moving averages. If you look into the pattern of these moving averages, then there is a clear fan out supporting the bears. This kind of fan out is clearly supporting the bears. Now the only conditions that is fulfilling or that is supporting the bulls is that the market has closed above these the moving averages. This also means that if the volatility remains high and if we see a very heavy candle on this the very heavy bull candle on Monday or and also on Tuesday, okay, and thereafter when the market comes down, then these moving averages won't be able to cross over. In that case, these moving averages will form a slip, and I told you that slips are very, very dangerous because slips in that case confirms 200% confirms that market is in its trend. Market has not changed its trend, and this is what has happened on the weekly chart I told you. So in my technical analysis for the week of April 11th and then the subsequent week, I told you that now the slip has formed and market is going to fall. That was on the weekly chart. Anyways, so as of now, market is partially bullish through the moving averages on the daily chart. Now comes the Ichimoku. Now this is the most important part. Okay, market is trading below the Ichimoku, and this is why the market is bearish through Ichimoku. Through Bollinger Bands, market is bullish. Through moving averages, market is partially bullish or bullish. But through the Ichimoku, market is bearish. And and the important thing is that until and unless market breaches and the market moves above the Ichimoku cloud, market will remain bearish. Now, if you look into the MACD is moving average, convergence, divergence, and clearly MACD is more than the signal. Okay, this clearly means that the directional MACD is bullish, and because there is not, see, the divergence is increasing in the MACD, but this is not much. This clearly means that yes, the market still has a lot of potential to move up. Okay, but this upward movement will be limited to some level that we are going to deduce, okay, just after this technical analysis. But as of now, through MACD, the market is clearly bullish. Then comes the stock RSI. If you look into the stock RSI, clearly bullish because the K channel is 95, more than 90. Okay, and the D channel is 82, more than 80. So the K is more than D. Okay, this means that the market is bullish through the stock RSI. And if you remember that I've told you this many times, that whenever MACD and stock RSI, whenever these two are indicating a particular direction for the market, then most likely or very likely market is going to follow that particular direction. Anyways, then comes the divergence indicator. So that the divergence is normal, it's only 50. It means the divergence in the closing prices of the candles, it is normal. Then comes the volatility. Now the volatility, okay, on May 20th it was 105, and on Friday volatility on the daily chart is only 100, means the volatility has decreased from the previous Friday. So the previous Friday it was 105, and then sorry, previous Friday means May 20th, and then yesterday, okay, it was yesterday on Friday, okay, it was only 100. So the volatility has decreased on the daily chart, that is good. But remember, the volatility has not decreased on the weekly chart. On the weekly chart, volatility is continuously increasing. Now this means that through all of the technical indicators, except the Ichimoku cloud, the market is in a short-term bull movement. There is a short-term bull movement through all of the technical indicators except the Ichimoku cloud. Now let's deduce the probable movement of the market, like how the market is going to behave or how the market is going to react the next week, the coming week. Okay, means how it is going to react on Monday is holiday. So Tuesday, Wednesday, Thursday, and Friday. So first, let's talk about the retracement. And guys, if you do not know how the FIB works and what are the FIB retracement strategies, then I have made a video on this in my technical indicator series. If you have not subscribed to this channel, then you can subscribe the channel and click on the bell notification icon, so that whenever I upload this technical analysis or this technical indicator, so you will get a notification and you can enhance your knowledge in the stock market. Now if we talk about this, the FIB, so I'm going to use the FIB here. So I'm going to connect these two levels. Now if we look into the FIB retracement levels, then market has comfortably breached this level, that was 38.2% in, and it was 4126.99. This means that market is now going to hit 4224. This is the 50%. Okay, so market is expected to hit this 4224. Okay, now if the market is able to breach this the level 4224, then it will come to hit 4291, and this 4291 is our very strong resistance. Okay, and in order to breach this 4291, market has to push really very hard. Okay, but eventually what is the limit of this particular retracement? Then the limit comes here. This is the limit, and if you see that this is 61.8%. 61.8% is 4322. It is 4322 is the 61.8%, and then we have the 200-day moving average, and then we have the 4291, and then immediately we have this Ichimoku. So 1 2 3 4 5. Okay, so these 4 or 5 factors, so these 4 or 5 factors will apply to the market, means the resistances, and these 4 or 5 factors, these 4 or 5 things are going to create a very heavy resistance for the market. This means that market can move up to this particular level, which is 4332, sorry, which is 4332, and we can also consider this the EMA, that is 4333. Okay, so you can say that 4322 or 4333, or at most 4395. That's it. Okay, so see, this is the zone. So you can clearly see that this is a particular zone. In this particular zone, the market, whenever the market comes to this particular zone, market will squeeze in this particular zone. Market will struggle in this particular zone, and after hitting or after struggling in this particular zone, market will eventually come down. And when the market will come down, and this time the market will breach this its level of 3810, it will come down to 3710. Okay, but that we will cover in our next technical analysis, means after 1 or 2 weeks, because for now market is expected to remain in this particular zone. So guys, this thing is clear that this the 4322, 4 3 2 2. Okay, this is the 61.8% of fib retracement, that is the standard retracement level. And then we have our 4291, and after 4291, okay, we have our 200-day moving average at 4333, and then we have our 4395. So market is going to squeeze in this particular level, so the retracement will be limited to this particular level. Okay, and as I told you, that that if you see that the market has breached and the market has closed above, and the market is trading above this the Ichimoku cloud, then only we will say now the market is going to be bullish. But until and unless market is trading below the Ichimoku cloud, see, market may try to, or in the intraday market may even cross or breach this the Ichimoku cloud. But eventually what we are going to look into we are going to look into the closing of the candle. Now let me show you, okay, how it works. That if you see that after forming a slip on the weekly charts, okay, it was confirmed that now the market is going to fall. And on April 20th and on April 21st, market indeed breached this particular Ichimoku cloud. But this was the intraday breach. But eventually market came down and closed within the Ichimoku cloud, and then finally it came down and closed below the Ichimoku cloud. So that was now it was 100% confirmed, market is going to fall, market will fall, market must fall. And this is the same thing that I am telling you here, that intraday you may see that yes, the market has breached, but you need to wait for the closing of the market. And most likely, or very likely, market will close below the Ichimoku cloud even after breaching intraday the boundary of the Ichimoku. Okay, so this is where the market is going to squeeze. This is where the market will squeeze, and the market will finally struggle, market will give up, and eventually the market will fall, as simple as that. So for now, this is what we are expecting. Now there is one more thing. On Monday, okay, see, this is what happens, okay, through the patterns, okay, that I have seen in last many years. And also in my analysis, I have found this, that whenever this kind of activity happens in the market, okay, means market is coming down, then market has breached this then the market has breached these the moving averages, and on one particular day market has closed above all of the moving averages. Then what happens is basically that on the next day, on the subsequent day, okay, market try to move up or the market comes down, okay, but eventually the closing of the market or the candle that is formed here, that closing will be above this the moving average. And if I give you an example that what kind of candle is going to form, then let me show you this. Now if you see here, okay, if you look into these two candles, okay, one is the green candle and one is the red candle. Okay, so if you look into these two candles, one is the green candle and then the red candle. So initially the market moved up, then it came down, but then there was a retrace, and then finally this kind of a dodgy candle has formed. Or in layman terms, you can say that this kind of plus candle. Okay, but it's a dodgy candle. And the market moved up because of this particular candle, that was a very heavy green candle. Because of that, the market moved up. So that kind of candle may be expected to form. Okay, this means that if you want to book your profits, in that case Tuesday, okay, Tuesday is the good day. And particularly if you see that there is a gap up open in the market and the market is moving up, in that case try to book your profits, means try to exit the market. Whatever profits you have made, try to book your profits, because on that day, on that particular day, Tuesday, market is going to eventually okay, means most likely market is going to come down, and then it will retrace, then finally it will form a dodgy kind of candle, okay, or a small bearish candle, or maybe a small bullish candle. Okay, but this kind of candle is expected to form on Tuesday. But if you do not want to book your profits, in that case you can hold, you can wait for the market to further move up to 4291, and when you see that the market is struggling, in that case you can sell. Okay, means you can book your profits. So this is where the lower high is going to form. This is what we will call as the lower high. Okay, So whenever the market hits the lower high, you are going to sell, because eventually then the market is going to come down. And this is what is most commonly seen in the market. Okay, so now if you have lost the opportunity to enter into the market, and if you see that this kind of candle is formed and the market is coming down, in that case you need to see, okay, like this particular level, that is 4109 or 4110. Okay, this is the 4110 will give you an opportunity to buy, because the market is going to move up, okay, in the short term. Like short term means two days, 4 days, okay, maybe for a week, market is going to move up. So when the market hits this, the 4109, 4110, okay, or around here, in that case you can buy. Now there is one more very important thing that you need to remember. If for some reason market fails to close above this our moving average, means if the market fails to close above 4110, okay, and market comes down and the market closes between the moving averages or below the moving averages, then no one is going to save the market and everyone will sell. But this thing is applicable only when we look into the closing of the market. See, intraday market can give you, very extreme movement. It can move up to this level, or it can come down to this level. But what we are looking for is the closing of the candle. Where is the closing? So this thing that the market is immediately going to come down, this thing is applicable only and only if the market has not closed above this or moving average, or you can say the level is 4110. 4110 is that particular level. So if the market fails to close above 4110, it closes below 4110, below this the moving average, in between the moving averages or below the moving averages, then no one is going to save the market. But as of now, the chances of happening that particular thing, okay, closing below 4110, are pretty less. But we cannot rule out anything in the market. This is market and nobody controls the market. So now this is what is most likely to happen. So after Tuesday, okay, then we can expect that the market is going to move up. Then Wednesday, Thursday, the market will move up. Okay, then Friday. Now comes the Friday. Yes, the Friday. See, the Friday is the weekly expiry for the market. So when the Friday comes into the picture, then on Friday, if you see that the market is struggling, in that case, the market can come down on Friday, because the market is the weekly expiry, and people book their profits on the weekly expiry. Okay, they exit their positions, particularly in the futures and options. Okay, they have to bind up the trade. They have to close the trade. This is the compulsion. Now, in order to verify, or in order to confirm, or in order to be double sure that this thing is going to happen, okay, you can look into the Dow Jones chart. Let me pull up the Dow chart. This is the Dow Jones Industrial Average Index. Okay, so if you look into the Dow chart, the same thing is happening. Okay, here on the Dow chart, this is the 200-day moving average. It is sitting on the lower boundary of the Ichimoku. Okay, then thereafter we have our this resistance, okay, around 33,582 or 33,580. Then comes this particular resistance, okay, because of this the confluence zone. The confluence zone is again at the same level. This means that around 34,050, okay, that in Dow the 34,050 is what I'm telling you for last many, not just last for many months, but more than a year. I'm telling you that 34,050 is a very critical, very strong resistance and support in the particularly for the Dow Jones. So when you are seeing, see, you are trading in the S&P 500, okay, that's fine, but you should also look into the Dow. And if you see that when the S&P 500 is struggling in this particular zone, and if you see that Dow is also struggling here, in that case 200% market is going to come down. So this particularly the Dow Jones will simply confirm that, okay, that this thing that you were expecting in the S&P 500, this thing is happening. This thing is confirmed that this thing is happening. Guys, if you have not subscribed to this channel, then you can subscribe the channel and click on the bell notification icon. And also, if you want to make 20 to 50% profit through options trading, then I have given the link to my Discord spreadsheet and the trade setup spreadsheet in the description of the video. You can take a look.